at the end of the month, okay, after summing up all your sales, you made a revenue of let's say 100,000 sales. 100,000 sales, okay. Yeah. So this is the total sales that you made within the month. You understand? The total sales that you made within the month is what? 100,000. Okay. And maybe your cost of goods sold. Okay. Your cost of goods sold is around maybe 80,000. 80,000. Okay. Your cost of goods sold is what? 80,000. You see, so that is where I was talking about. So if you don't do all this labor cost, social security and other stuff, the tax man, when they come, they can simply deduct this one from you and say that okay, the guy is making profit of 20,000, and they will now apply their rate on that 20,000, of which you are going to run at a loss. You understand? But if you're able to keep records of these things, okay? Wait, so let's assume maybe your labor cost is 10,000. Okay? Let's assume, okay, let me make it 5,000. Maybe labor cost is 5,000. Maybe you are paying social security of let's say 500 cedis every month. Okay, and then when it comes to depreciation, I said the depreciation is about the fixed assets. Okay, for instance, if you are even renting, okay, and it's long term, you can apply the depreciation to it, the depreciation cost. So maybe you are paying depreciation cost of 100 cedis salary. So maybe you are paying yourself like 1,000 cedis of every month. You are paying yourself 1,000 cedis, and then other operation expense, other overhead administration expenses that you make, you buy water, food, other stuff. That's not related only to the sales that you are making within that month. Then it becomes your other operation expenses, the TNT that you pay, the transportation that you pay, the bills that you pay, the water that you buy at the workplace. I mean, any other expense that you make. Okay, so let's assume that one too is 500 cedis at the end of the month. And then financing costs. The financing cost talks about the loan. Okay, maybe you've taken a loan to run your business. Okay, or you borrowed money from any other source and they are applying what do you call it? They are applying monthly charge. It could be an interest. So let's say you've not taken any loan. So here will be 0.00. Then we have what? Profit before tax. So now the profit before tax, you have to sum up all this costs. So we have the cost of goods sold. So you add it to your labor cost, you add it to your social security cost, you add it to your depreciation cost, then you add your owner's salary to it, then you add other operation expenses to it. Okay, so we have 80,000 plus 5,000 plus